Morning, everybody.
Morning.
So my name's Harvey Naiman, as you can probably see on my little box there, and I've been doing law for too many years. So I think, though, what the focus of this talk is designed to be is with respect to new construction, HST implications, and more particularly even assignment agreements, because I think that's where a lot of you guys may be getting involved or have been in the past. Assignment of new construction is complicated. There are a lot of issues to deal with, and there's a lot of pitfalls and minefields that you should be aware of. First of all, with respect to new construction, there's HST. That's the bottom line. There is HST on new construction, whether you're dealing with a condominium or a detached house. Normally what you see is that when people buy new construction, the HST is included in the price. That's in most of the offers that I see, builder offers. That being said, when you've got new construction, there is a rebate that buyers are entitled to from the government with respect to HST. And so when we step back to the agreements of purchase and sale between the builder and the buyer, the builder, as I said, includes HST normally in the price, but he says, because I'm paying HST, you, Mr. Buyer, are not going to get the rebate. You're going to give the rebate to me. But you have to qualify for the rebate. And the way that you qualify for the rebate with respect to the buyer is that you're buying it for your principal residence or that for your blood relatives. And you're making representations to the builder during the currency of the transaction that, yes, I'm buying it for myself, I'm going to be living there. And there's documentation that you'll be signing for closing. And then you're assigning the rebate that is otherwise available to you to the builder. And that's basically it. There's no application you make to the government or anything. The builder is dealing with it on their own. And so the price includes the spec to new construction. It can be anywhere from between 24,000 to 27. Okay, does everybody hear me?
Sorry, you got muted for a second there. Apologize. I'm gonna mute a few of these. Okay, you can hear me, right, Harvey?
I can hear you. Yeah.
Okay. Yeah. Sorry. Keep going. Keep going. Sorry about that.
So I was mentioning how, on a normal situation, you're assigning the rebate to the builder, and that's it. Now, the complication can be is if you're not buying it for yourself. And actually, I'm just going to turn this off, please. So if you're not buying it for yourself, if you're buying it to rent, it's not the end of the world with respect to the HST rebate that's available to you. But the downside when you're buying it for rent is that you don't qualify for assigning it to the builder on that transaction on the original closing. So what happens is, because you don't qualify for that rebate as far as the builder is concerned, because you're not going to be living in there, you're renting it out, the builder will add it to that final price. So the purchaser is not only going to have to come up with the price that he agreed with, and plus the adjustments, etc., that are on the agreement of purchase and sale, but he's also going to have to come up with perhaps another $24,000, $25,000 on closing. Now, that's not the end of the world for the buyer, because if the buyer produces a lease for at least 1 year, so he's renting it to someone who's going to be living there as their principal residence, if he provides that lease for at least 1 year, he can apply directly to the government for that rebate. Now, I suppose we should start talking now about assignments of these agreements of purchase and sale, because they are complicated, and there's two directions you have to look at. You're looking at the direction where you're dealing and trying to protect the interests of the assignor, or you're looking to protect the interests of the assignee. So I suppose to begin with talking from the perspective of the assignor, the person who wants to so-called flip this thing. The first thing that you have to be concerned about is there a right in the original agreement of purchase and sale to flip it, to sell the thing, to assign the unit or the house that you're buying from the builder. You can't assume that it's there. For one thing, for more often than not, it's not there. And the builder, if he's not giving permission to give consent or permission to assignment, even if he does say it, he could say that he could refuse it for any reason whatsoever, the builder's discretion. So, and you could be in default of this agreement of purchase and sale with the builder, even by virtue of just listing the thing or advertising it for sale, thinking that maybe, let's sell it first and then I'll try to get permission if it's available from the builder. So that's the really first step you've got to do with anybody who's coming to you asking, I want you to help me in flipping this unit, is you have to determine whether this fellow has the right to begin with to flip it. And if he does have the right, if it's already built into the agreement of purchase and sale, you have to confirm as well, how much is it going to cost? Because the builder most likely in most occasions will not do this for free. And it could be quite expensive. It's up to the builder, how much he wants to charge, the builder and his lawyer. I've seen anywhere from several $100s to several $1,000s. So that obviously can make a difference. And so it's something that should be determined in advance. And then what you also have to consider, and this is very important, are the HST repercussions of this thing with respect to the seller. And there's a number of them. First of all, if there's going to be HST exigible or applicable to this transaction, the assignor, the flipper, as far as CRA is concerned, has to determine whether the flipper is a builder or not. And don't think that you actually have to be a builder putting a shovel in the ground to be a builder as far as CRA is concerned, because that's not the case. You can be categorized a builder for HST purposes if your intention here, when you bought the unit, was either to sell it or to rent it. And 9 times out of 10, the CRA will determine that you're a builder for these purposes if you're flipping a unit. You're guilty before proven innocent kind of thing, because as I mentioned, it goes to intention. And so initially, prima facie is the Latin word for this, the CRA will consider that because you're flipping this thing, you initially bought the unit or the house for the purposes of flipping. So, and it's an argument, it's a fight down the road if CRA is going to determine that you're a builder, for you to say, no, my intention was initially to buy for myself, but life happens, circumstances change. I got transferred with my work. I can't live in this place now, or things happened in my life that just determined that I have to sell this thing. I can't close it. It's an argument. You can't assume that CRA is just going to believe you, or that just because in your mind you had that intention, that there's no HST that could be applicable on this thing. There are ways of actually getting rulings from HST in advance, whether it's applicable or not. But I think you have to go into the situation thinking initially, when someone's coming to you to flip it, that you've got to deal with this HST issue, because CRA is going to consider most likely the flipper to be a builder for those purposes, and that HST is applicable. So when I'm saying that HST is applicable, what exactly does that mean? Well, in most cases, of course, a flipper is flipping this thing for a profit. So first of all, that profit will have HST on it. And the next thing, which a lot of people don't recognize, is that when the flipper is flipping this thing, he's also expecting to get the deposit that he initially paid to the builder back. Makes sense. And sometimes you've got $40,000 or $100,000 or perhaps more with a very expensive condo deposits that the flipper has paid to the builder. The recovery of those deposits also has HST on it. So you've got this HST exposure as far as the flipper is concerned, not only on the profit, but on the return of the deposit. And don't think that this is something that, you could just pass through and hopefully nobody's going to do anything or be aware of it, because CRA is very aware of the flipping that's been going on the past few years. And they have a lot of tools at their disposal to see what's happened and to determine what happened. One of the easiest ways for them to do this is to follow just the FinTrack rules, because when an original buyer, the flipper, for example, when he's paid deposits to the builder's got to record these things as far as FinTrack is concerned. And so when CRA takes a look at the FinTrack and sees Joe Blow paid this deposit, but Mary Smith closed the deal, so right away there's a question that can be asked. So it's something that CRA is quite aware of, and you can't hope that just this one transaction out of 1,000 is not going to raise any eyebrows. Now from the buyer perspective, the buyer perspective here, as far as the HST is concerned before we leave that, just the other thing with respect to the seller is that aside from the HST consequences that I told you about, there are also our capital gain exposure that the flipper would have, because he's turned this into a business. And so there's tax on your income. This is totally over and above the HST that I told you about. So there could be capital gains exposure too, with respect to the profit. And even in a worst case scenario, it could be treated as normal business income, which has a higher tax rate than capital gains, if it's determined that this is kind of like a real business that this guy's doing, this flipper. He's done a number of flips. It's like he's in the business of doing this. So it's not so much a capital gain as it's actual business income. So, the bottom line there is that there's a lot of tax consequences that have to be taken into consideration. To try to protect this, by the way, as far as the seller is concerned, really there's only a couple things, and perhaps the first thing I'm going to suggest is not too practical. The first thing that you can do, again, trying to protect the seller here, for him to get the maximum profit he can, is that, on the agreements of purchase and sale, when it comes to HST, you say whether the purchase price includes HST or not. You could say that with respect to the flip, that the profit to the assignor, to the flipper, is plus HST. So then clearly the flipper is not going to be out of pocket the HST, but it's going to be added to what the buyer has to pay on closing. That perhaps is not too practical, but I leave that up to you guys. But in the absence of that, and if there's HST, then whether it's the seller, the flipper is going to have to pay it, and it's not coming out of the pocket of the buyer. Now, I was going to begin to talk about from the buyer's, the assignee, the flippee, the guy, the end user, from his perspective. He obviously is going to be concerned whether he's paying HST over and above, or it's included in the price for the flip that he's paying. The other thing that he has to be concerned about is the applicability of the HST rebate that I initially talked about, which is, like I said, it could be $24,000, $27,000. When you're dealing with this assignment, it's crucial, obviously, that you have to get something in writing from the builder who agrees and gives consent to the assignment, and you've dealt with already in terms of that cost, who's going to be paying for it, whether it's the flipper or the flippee. But the builder has to provide his consent assignment. It would be also great if you could confirm with the builder that even though there's been an assignment, that the flippee, the end user, the assignee, will be entitled to get the rebate when he's closing the deal directly with the builder. It's not 100%, and you just can't assume it. In virtually every agreement of purchase and sale I've seen, builder deals, There's a clause in there over and above what I said initially about how the HST is included into the price. The buyer is going to assign the rebate back to the builder, assuming he qualifies, which, if he's buying it for himself, he qualifies, etc. But see, now you got the question of it's not the original buyer who's going to be closing the deal. It's this assignee that's going to be closing the deal with the builder. The assignee wants to make sure that he's not going to have to come up with an extra $24,000 on closing. So even though the assignee, the flippee, is closing this deal, buying this assignment, thinking that he or she is going to be using this place, they're going to be living there, you just can't assume that that rebate's there. I was saying how in every offer that I've seen, virtually every offer, the builder has the right to deny that rebate for any reason. So you could step back to the original guy. He's buying it for himself. The builder, in theory, could still say, it's too bad. I believe you, but you know what? Because I have the right in the agreement of purchase and sale, you're not getting I say you're not entitled to the rebate, so I'm going to add the rebate to the price on closing. And why the builder would have an extra incentive to do that with an assignment is that, you see, if there's any question here with respect to the HST, that if whether it's the original buyer or if it's the assignee, the flippee, who's been given a credit for HST, if there's any question for that, as far as CRA is concerned, the builder is ultimately responsible, as well as the end user, but the builder is also on the hook. So he's got an additional headache here with a potential exposure to CRA. So he's thinking to himself, I don't even want to get involved in this. I don't have to get involved in this. I've got my right in the agreement of purchase and sale that I'm just making the end person pay for the HST rebate, and that's it. So that danger is there. One way to actually try to minimize that danger is that you not only get an assignment agreement done, where the person, this unit is being flipped, but it could also be part of that assignment contract that there's a requirement for the builder to provide an amendment to the agreement of purchase and sale, the original agreement. An amendment where he's actually substituting the purchaser to be the assignee, that end user. So insert, delete, or delete, insert. If you've got that amendment to the agreement of purchase and sale, then it really is a strong thing to anticipate that the builder will give you the rebate on the ultimate closing, the final closing between the assignee and the original and the builder. Again, I'm warning you that the builder could say no because it's in the agreement of purchase and sale for any reason, but there's a higher likelihood that you're not going to have any argument as far as that HST rebate is concerned if you're going to get an amendment to the agreement of purchase and sale. You may have perhaps a practical problem in getting the builder to do that, but it's at least you got to try to, because it's something that really helps the assignee, the end user, a sense of certainty with respect to that HST rebate, because $27,000, that's a lot of money. And to come up with that on closing, and perhaps by surprise, because he's going to have over and above all that just the normal adjustments you have when you buy from a builder, and those adjustments are certainly much more than what you're going to get on a normal resale. That could be several $1,000s, forgetting about the HST rebate scenario. So it's something to be aware of, and to try to do some homework on to see if all things are feasible. Now, at the end of the day, if you're having to pay the HST rebate to the builder on closing, as far as the flippee is concerned, the assignee, end user, he can't convince the builder to do otherwise. He's bought this thing on a flip. The builder is saying you got to pay this HST rebate on top of the price. Okay, so he ends up paying it because he has to. In effect, he has to close the deal. It's not lost. You can apply for this after closing. And you've got 2 years to do it. There's no reason to wait, but you apply for it after closing, you can get it back. There could be a certain adjustment for it though, because the HST rebate that is available, for example, with respect to a condo, and I'm going to mention condos because typically it takes longer to get, you know, from agreement of purchase and sale to final closing with respect to a condo. It takes several years. That agreement of purchase and sale, initially you bought it, it has a certain price, of course. But then once you're actually closing the deal, it could be several years, as I mentioned, the price could certainly have gone up, and it could have gone up considerably. So this HST rebate, it has two components to it. It has a federal component, which has a maximum of $6,300. And it's got a provincial component, which has a maximum of $24,000. Typically, I was mentioning the rebate of $24,000 because there's a sliding scale as far as the federal component is concerned. And basically, when you're over 450, you're basically at the top scale where you don't qualify, like that $6,300 isn't there anymore. So you're left with the $24,000 from the province. And so if you've bought a condo for less than 450, less than 350, and you bought this in 2015, and it's coming to close now, and you've been fortunate enough to get the rebate credited to you from the builder, you're getting that rebate calculated on that original price. But when CRA, and this is applicable when you're applying for the rebate back from the government after closing, when CRA is processing this application to give you back that rebate, they're looking at the fair market value of the unit now. They don't take the price that you originally paid 5 years ago. So they'll make their own determination, and they'll use comparables. And so if the price has gone up considerably since you bought the thing, or the original purchaser bought the thing, then the rebate that you can get back from the government will be adjusted accordingly. But it mainly will be adjusted on the federal side, like I said. So certainly the bulk of the rebate is still available to you, and it's silly not to apply for it. And the other thing is that if you do it properly, and you're applying, you can only do this applying after the fact, after you've closed the deal already, is that you can actually apply for a rebate on, you would be saying what the fair market value of the thing is. And because your flip, when you've purchased the flip, had HST to it, whether you paid on top of the flipper's profit or not, there is HST there, as I explained. There's a certain amount that you can claim on that application for a rebate, which could be more than the rebate applicable on the original transaction. There's a maximum of $30,300 on that to claim. This is complicated, it's numbers, it's back and forth. The bottom line is that if at the end of the day, your client does have to pay HST, that rebate, on top of the price with the builder, there is an application to get all or part back of it after closing. And then there's one other qualification as well. You got to make sure that, especially if you're dealing with a condo, that and you're buying a flip, with respect to the HST rebate, there can't be anybody in there. So you can't deal with a flip where there's already been an interim possession and somebody's actually moved in. So if the flipper has rented it out during interim possession, or the flipper has himself or herself moved in during interim possession, from interim possession to the final closing, that rebate's gone as far as the end user is concerned. the assignee. So, there's a lot of things to consider, and it's complicated. There's a lot of tax issues. By all means, a client, both the flipper and the flippee I think they should seek tax advice before they actually enter into this thing, making sure that even the seller or the flipper actually has a right to even to flip this thing, and certainly see a lawyer to take a look at this as well, because it's complicated and there's a lot of issues here, and a lot of tax exposure issues. And if you don't pay the taxes that you're supposed to as far as CRA is concerned, it's not just the tax that they want you to pay, but there's interest and penalties too, and it can add up very significantly. So there's a lot of red flags, there's a lot of minefields that you have to walk through. It can get done. There's money to be made, but you got to be careful, because at the end of the day, and I've mentioned this a lot of times, if there's blame to be had, you know who they're going to blame, and it doesn't matter if you told them. It's still, when there's money involved, you should have told me. You're supposed to know. You're the professional. I'm not the professional. You do this all the time. I relied on your advice. So, you have to have educated people dealing with this on both the seller and buyer side on flips, and it's really good for them to seek to get that professional advice before they enter into these things, and making sure you got the right to flip this thing to begin with.
So the bottom line, Harvey, is, well, obviously we have consulted with you many times at our office here, and we encourage our agents to consult with you because you obviously know what's going on. The bottom line is, before any agreements, well, I mean, you do have a 10-day cooling off period, but what are your intentions when you're buying this condo? Is it to flip, or is it to, long-term holding, whatever it is? But they should obviously get very detailed advice from somebody like you, or in particular you, of course, and find out what the future holds, right? And what's going to happen once it closes, right?
Yeah, 100%. And these agreements with the builders for condos especially, it's not 1 or 2 pages. It's dozens and dozens of pages. There's disclosure packages, like it's a ton of stuff. And but in the middle of all that, you want to make sure that you at least have a right to assign it or sell it or rent it, and a determination in advance how much it's going to cost from the builder and the builder's lawyer to get that. And it would be lovely to as well include a clause that upon assignment that the builder agrees to amend the agreement of purchase and sale by substituting the purchaser. It's things you have to look at. Now, whether you can actually achieve these things, I mean, it's a question of circumstance and the individual transaction, but it's like chicken soup. It doesn't hurt to try and ask initially, right? And you're protecting your client by doing
we got about 7 minutes left. I do have a couple of questions. This is from Tertia, one of our agents. The first question is, I mean, this relates particularly to condos. Her son, who's in university, they bought a second property. It was purchased for use by the family member. And if they sold it 3 to 4 years later, are there any tax implications?
Well, if they've closed the deal already?
I'm assuming yes. Well, they've been in 3 to 4 years, right? So
yes, correct. We closed
sorry.
last summer, and he's living in there, and he'll be there for the duration of university. So we just want to know what happens if we intend to sell it in a few years when he's done.
So who's on title again?
Me and my husband are on title, but my son's living there.
Okay, so you don't have to worry about the. Let me step back a little bit. When I was telling you about, however you're going to qualify and however CRA determines you to be at the time when you're actually closing the deal, if you're using it for yourself or your immediate family, your blood relatives, you've got to be in there for at least a year.
Okay.
Now, so in your scenario, you're on title, your son's living there, and it'll have been closed for 3 or 4 years.
Correct.
There's no HST consequences that you'll have, but of course it's your son's principal. It's your son's principal residence. It's not.
Correct. Yes.
But he's not on title. So
No.
because you're on title, um, you've got the capital gain consequence there,
Okay.
because you're selling a property that is not your principal residence.
Right. Okay.
But the good news is that I would be very confident that it's a capital gain as opposed to normal business income, because you've held on to it for a significant period of time.
Okay. And what's the difference of typically the difference of rate for business tax versus capital gains tax? Is it they're quite a big?
Well, it could be significant, although that could probably change. We can all thank our present government for that. But right now, capital gains means that basically your profit, you take 50% of that, basically. Half of that profit goes into your normal business income. So whatever your tax rate is, you're paying that tax rate based on half the profit. If it's normal business income, then it's just added onto your business income, and you're just like the whole thing, the whole profit, and you're paying your tax rate based on the whole amount.
Okay.
So in the way things stand as we speak, it's certainly beneficial. But it's interesting. I've had clients who are trying to take advantage of. They know there's a capital gain, and they're realizing them now because they're very afraid of what's going to happen.
Right.
The capital gain thing was going to be the benefit, the exemption is going to be shrinking.
So Tertia, you have one more question. We got 4 minutes left, so maybe we can squeeze it in.
Very quickly, if a builder purchases a piece of land and subdivides it and sells out, 10 pieces of land, how does HST work on that? Did they charge HST to all the purchasers for the new subdivided lots?
Well, there's HST on it.
Yep.
But there could be certain exemptions as far as the buyer is concerned, to tell the builder that he doesn't have to add HST to the sale price. Okay. One of the ways is that, well, first of all, in the agreement of purchase and sale, the purchase price does not include HST. So if you're protecting the builder, that's very important.
Right.
Now, from the buyer perspective, if he gets his own HST number, then he can do, it's an undertaking and indemnity thing that happens on closing, where basically he's telling the builder, don't add HST on the price, because I'm going to be dealing it with what I'm going to be doing with the property. And I promise you that I'm going to self-remit, and I'm going to deal with it.
Okay.
So there's an undertaking, and because he's actually got an HST number, builder, especially if you got that clause, as I mentioned, in the agreement of purchase and sale, then the builder should not be adding that. I think there also may be an exemption if the buyer is doing it just for himself. He's not in the business of doing it, and he's buying it for building a house for himself. Mm-hmm. There may be an exemption on that too. But at the end of the day, I'm not an accountant. I tell everybody that I'm a lawyer. Yeah. So you have to get further accounting advice on that. But I think that's there. But definitely, if the buyer has an HST number, and you've got a clause allowing for this in the agreement, then the buyer does that undertaking to self-remit, etc., and the builder will agree, and he's allowed to do this. He doesn't have to add the HST to the sale price.
Okay, interesting. All right, and this is again a deal where they sold already to my clients. The builder sold already to my clients. My clients bought the lot. They charged them HST and the purchase price. And he said, well, I'm subdividing it, so I have to charge HST. And so my client, and he may have his ways to, because he has an HST number. He's a doctor and he has other businesses going on. So maybe he'll figure it out. But okay, I just wanted to know how that really works. I never knew about vacant land. Thank you.
And at the end of the day, if he is entitled, because if there is this exemption that he's buying this thing to build his own house on, then he may be able to apply for the HST back after closing.
All right, we're going to be
maybe it's accounting advice.
We're going to be canceled any second now, so just in case we get cut off. But anyway, thanks a lot, Harvey. We're going to have this on YouTube, and we'll send it out to everybody. And I appreciate you coming on and giving us great legal advice again. And anybody who wants to contact Harvey, just contact us. We'll get you in touch with him. We'll have it.
Pleasure, and thank you.
All right, take care, Harvey.
That's right. I was going to say, any further questions from this, just give me a call. Thank you. Right. Take care. Good luck.
Thanks. Bye.
Thanks, everybody.
Take care.
Take care.